Yeah, that's a good question. So, we aren't really fixed income investors. Like I mentioned, the lowest bar is looking for 2x. But sometimes we found businesses where the bonds were sitting at, 50 cents on the dollar or 30 cents on the dollar. So obviously, if we invested in the bonds, we're going to be higher on the capital structure. And to some extent, it's a little bit easier uh, to make those investments if you have high conviction that the business is going through temporary distress and those bonds are likely to get to par in some reasonable time frame. So in that case, the equity might give you even more returns. Sometimes when you have bonds at 40 cents, by the time they get to par, the equity might be a 5x. But the risk profile is much more muted with the bonds. And so sometimes we've opted to buy distressed bonds uh, and gone that way, and it's worked out okay. It's just a proxy for equities.